Hi everyone, this is Steve Elwell, Chief Investment Officer and Partner at Level Financial Advisors. And it's been a wild couple of days here in the investment markets, so we thought we would shoot a short little video to talk about what's going on, what's causing the markets to have some volatility, but also, most importantly, what is the impact on client portfolios and what does this mean for everybody going forward. So just as a recap, a couple of days ago, the president announced new wide-ranging tariffs that were wider than expected. So what I mean by that is more countries involved than what originally the market was expecting, but also higher tariff rates than what the market was expecting, and that caught the market off guard. The tariff talk hasn't really been anything new this year. It's been the main headline that the investment markets have been trying to digest. But now that we have the actual information of what's going to be applied and to who, the stock market is taking that and digesting it very quickly, which it doesn't take a rocket scientist to figure out the stock market does not like the tariff plan. It thinks it will be negative for future economic growth, negative for future corporate earnings. So far the stock market is having a bit of a tantrum dealing with that information. I do think it's very important to have the context of what does that mean for you and your portfolio, because without having it said out loud, because it's not catching any headlines right now, is just how well diversification is working this year. The bond market is off to a great start this year, which is not surprising. When people get scared of stocks, what do? They go buy bonds, government bonds, corporate bonds, foreign government bonds. And so this year is a really good example. Depending on which bond holding you're looking at, most of them are up anywhere from 2 to 5% for the year. And think about the context of the type of return that could be if you annualize that over the entire year. I mean, a 5% return in the first 3 months of the year equals a 20% return for the entire year if it continued at that pace. I'm not predicting that, but that's the type of pace the bond market, specifically Treasury inflation protected bonds, that's the pace they're on for returns this year. That would be an earth-shattering return for what's supposed to be one of our most conservative investments. And we could talk a little bit about all the reasons as to why that particular category is doing so well, but across the board, bonds are having a very good year because investors that are nervous are buying more and more of them right now. So that part of the portfolio is working very well. On top of that, outside of US stocks, big and small, which are struggling this year mightily, international stocks relative are having a great year. In fact, even after today, many international stocks will still be slightly positive for the year, which for most people find nearly impossible to believe. And so big international stocks, small international stocks, emerging markets are doing well relative. Global real estate is doing well relative, mainly because global real estate benefits when interest rates go down, and interest rates have gone down because investors are nervous. And so all those categories, when you compare them to the S&P 500, are doing very well this year, even if they're slightly negative. And so, like I said, some of them are not even negative. So when you look at how the portfolio is built, for many of you, the portfolio is built in a way where we're trying to control some level of risk because many of our clients are living off their portfolios. And the bond market is doing very well. Some of the diverse stock funds we have are doing much better than what the S&P 500 is doing. And so that should give you some layer of comfort that the headlines that you see on TV about stock, S&P 500 down 5% for the day does not mean that your portfolio has that same return that day or for this year. In fact, many of the clients that I've talked to in the last couple of weeks have been very surprised at what their return has been in a positive way compared to what they're hearing about how things are going with the S&P 500. So that context, I think, is very, very important. If you have questions about that in your own portfolio, we'll be sending out quarterly statements shortly for the first quarter. So you're going to see those returns for the first 3 months. But if you want information as of the most recent moment, it's just an email or a phone call away to your advisor, and we can give you an update on how things are going. And then the last thing that I probably would add for those that are living off the portfolio who may be maybe a little more nervous because they're actually taking money out of the portfolio, I would point out that for the vast majority of people who are doing that, we have years and years worth of money available in bond holdings within the portfolio. And again, the bond holdings are positive for this year. So we can lean on those bond holdings, wait for stocks recover, don't sell stocks while they're down. And for many people, we could have at least multiple years, if not 5+ years worth of money available in bond holdings without selling any stocks at all. So think about just how bad the downturn would have to be, how long it would have to last for us to be forced to sell stocks at what looks like a bad price after they've gone down. So that is by design. That is how we build portfolios for retirees. So from that perspective, I have no concern about us to be able to get everybody the cash that they need each month or each quarter to continue covering their normal living expenses without being disadvantaged by what's happening in the stock market at the current moment. So hopefully that provides some context and some comfort in the current moment as the headlines get kind of crazy and the investment markets are very volatile. Again, if you have questions or concerns, don't hesitate to email or call your advisor, and we'll be happy to talk about how all of this relates to you and your portfolio. Thanks for joining in this video, and we'll talk to you soon.